Alright, one take. One take. One take. 12 pages. Yeah. 12 pages. Alright.
I just like this.
Thought the beat was good. Yeah. Business. All about business. Business processes. Introduction. Accounting is the recording, measurement, interpretation of financial information. Large numbers of people, institutions, both within and outside business use accounting tools to evaluate operations. Financial Accounting Standards Board has been setting principles and standards of financial accounting and reporting in the private sector since 1973. GAAP, Generally Accepted Accounting Principles. SEC, Securities and Exchange Commission. PCAOB, Public Company Accounting Oversight Board, has the ability to file a disciplinary order against a firm or individual that's either temporarily or permanently prohibits that firm or individual from practicing accounting. Certified Public Accountant, that's a CPA. Individual has been certified by the state in which he or she practices to provide accounting services ranging from preparation of financial records and the filing of tax returns to complex audits of corporate financial records. Certification gives a public accountant the right to express officially an unbiased opinion regarding the accuracy of the client's financial statements. Most are self-employed. Vault.com use a weighted rank system based on survey results to create a score that represents a work-life quality issues to reflect the prestige of the firm. Forensic accounting, which is accounting that's fit for legal review and involves analyzing financial documents and search for fraudulent entries for financial misconduct, functioning as much like detectives as accountants. Forensic accountants have used since the 1930s. Many auditing firms are expanding their forensic fraud detection services. Hey, this is what we are. The Association of Certified Fraud Examiners, with certified accounting professionals as certified fraud examiners, private accountants employed by large corporations, government agencies, and other organizations to prepare and analyze their financial statements. Needed by large organizations, government agencies, and other organizations. No shit. Prepare and analyze their financial statements. Already said this. Title said controller, tax accountant, or internal auditor. Deeply involved in many of the most important financial decisions of the organizations for which they work. Can be CPAs and me become CMAs by passing a rigorous examination by the Institute of Management Accountants. Yeah. Certified Management Accountants. Yeah. Private accountants who, after rigorous training, are certified by the Institute of Management Accountants. That's what I just said. Hey, bro, this is a big one. Yeah. Bookkeepers are responsible for obtaining, recording the information that accountants require to analyze a firm's financial position. They generally require less training than accountants. Accountants, on the other hand, usually complete coursework beyond their basic 4 or 5-year college accounting degrees. This additional training allows accountants not only to record financial information, but to understand, interpret. What the fuck? B-switch. Okay. This additional training allows accountants not only to record financial information, but to understand, interpret, and develop sophisticated out to classify and analyze complex financial information. Managerial accounting refers to the internal use of accounting statements by managers in planning and directing the organization's activities. Let's talk about this one. Cash flow, the movement of money through an organization over a daily, weekly, monthly, or yearly basis. Budget and internal financial plan that forecasts expenses and income over a set period of time. Managerial accountants help prepare. Think of a budget as a financial map, showing how the company expects to move from point A to point B over a specific point in time. Alright. Master budgets, master budgets for the entire firm. Top down master budget begin at upper management level and filter down to the individual department level. Bottom up badges start at department or project level and are combined at the chief executive's office. Expected operating expenses, cash outflows such as wages, material costs, and taxes. Operating revenues, cash inflows in the form of payments from customers. Annual report, summary of a firm's financial info, products and growth. Plans for owners and potential investors. Let's talk about assets. A firm's economic resources or items of value that it owns, such as cash, inventory, land, equipment, buildings, and other tangible and intangible things. Liabilities, debts that a firm owes to others. Owner's equity equals assets minus liabilities and reflects historical values. Alright. Accounting equation, assets equal liabilities plus owner equity. Double entry bookkeeping, a system of recording and classifying business transactions that maintains the balance of the accounting equation. Accounting cycle, the 4-step procedure of an accounting system, examining source documents, recording transactions in accounting journal, post-recorded transactions, and prepping financial statements. Examine source documents, record transactions, post transactions, prepare financial statements. A journal, a time-ordered list account transactions. Ledger, a book or computer file with separate sections for each account. Trial balance, a summary of the balance of all accounts in the general ledger. Alright. Income statement, a financial report that shows an organization's profitability over a period of time, month, quarter, or year. Revenue, the total amount of money received from the sale of goods or services, as well as from related business activities. Cost of goods sold, amount of money a firm spent to buy a produce or the product it sold during the period to which the income statement applies. COGS, beginning the inventory plus interim purchases minus ending purchases. Holy shit. Gross income, revenues minus the cost of goods sold required to generate the revenues. The profit, the difference between what a customer make and sell a product and what a customer pays for it. Expenses, the cost incurred in the day-to-day operations of an organization. Common expenses, selling general and administrative expenses. Research, development, and engineering expense. Internet expense. Depreciation, the process of spreading the cost of long-lived assets such as buildings and equipment over the total number of accounting periods in which they are expected to be used. Net income, the total profit or loss after all expenses, including taxes, have been deducted from revenue, also called net earnings. Balance sheet, a snapshot of organization's financial position at a given moment. Liquidity. Liquidity? Is that how you pronounce it? Liquidity? How quickly each could be turned into cash. Current assets, assets that are used or converted into cash within the course of a calendar year. Also called short-term assets. Accounts receivable, money owed a company by its clients or customers who have promised to pay for the products at a later date. I'm on the 4th page.
I just like this.
This should be 30 minutes long. Alright, round 2. Am I at? Fuck. Alright. Current liabilities of firm financial obligations to short-term creditors, which must be repaid with credit. Accrued expenses. All unpaid financial obligation incurred by an organization. Statement of cash flows. Explain how the company's cash changed from the beginning of the accounting period to the end. Cash from operating activities calculated by combining the changes in the revenue accounts, expense accounts, current asset accounts, and current liability accounts. Cash from investing activities calculated from changes in long-term or fixed asset accounts. Cash from financing activities calculated from changes in long-term liability accounts and contributed capital accounts and owner's equity. Ratio analysis calculations that measure an organization's financial health. Brings the complex information from the income statement and the balance sheet into sharper focus so that managers, lenders, owners, and other interested parties can measure and compare the organization's productivity, profitability, financing mix with the other similar entities. Profitability ratios measure how much operating income at a net income or an organization is able to generate relative to its assets, owners, equity, and sales. The numerator top used in the examples is always the net income after taxes. Common profitability ratios include profit margin, return on assets, and return on equity. Profit margin, net income divided by sales. Return on assets, net income divided by assets. Return on equity, net income divided by owner's equity. Also called return on investment, ROI. Asset utilization ratio. Ratios that measure how well a firm uses its assets to generate each $1 of sales. Receivables turnover. Sales divided by accounts receivable. Internal inventory turnover. Sales divided by the total inventory. Total asset turnover. Sales divided by total assets. Liquidity ratios. Compare current short-term assets to current liabilities to indicate the speed which a company can turn its assets into cash to meet debts as they fall due. High liquidity ratios may satisfy the creditor's need for safety. But ratios that are too high may indicate that the organization is not using its current assets efficiently. Liquidity ratios are generally best examined in conjunction with an asset utilization ratios because high turnover ratios imply that cash is flowing through an organization very quickly. A situation that dramatically reduces the need for the type of reserves measured by the liquidity ratios. Current ratio, current assets divided by current liabilities. Quick ratio asset test. A stringent measure of liquidity that eliminates inventory debt utilization ratios. Ratios that measure how much debt an organization is using relative to the other sources of capital, such as owner's equity. Alright. Debt to total assets ratio, a ratio indicating how much of the firm is financed by debt and how much by owner equity, times interest earned ratio. Operating income divided by interest expense. Per share data used by investors to compare the performance of one company with another on an equal per share basis. Earnings per share, net income or profit, divided by the number of stock shares outstanding. Dividends per share, the actual cash received for each share owned. It is most important to remember that integrity in accounting processes requires ethical principles and compliance with both the spirit of the law and professional standards in the accounting profession. Most states require accountants preparing to take the CPA exam, to take accounting ethics courses, transparency and accuracy in reporting revenue, income and assets, develops trust from investors and other stakeholders. Yeah, we on chapter 15, bitch. Woo. Yeah, finance, the study of how money is managed by individuals, companies, and governments. Yeah, money, anything generally accepted in exchange for goods and services, also called currency. Bartering, trading one good or service for another of similar value. Measure of value, money serves as a common standard, a yardstick of the value of goods and services. Alright. Acceptability. To be effective, money must be readily acceptable for the purchase of goods and services, for the settlement of debts. Divisibility, given the widespread use of quarters, dimes, nickels, and pennies in the United States, it is no surprise that the principle of divisibility is an important one. With barter, the lack of divisibility often makes otherwise preferable trades seem impossible, as one would be an attempt to trade a steer for a loaf of bread. Okay. Portability, clearly for money to function as a medium exchange, it should be easily moved from one location to a next. Large colored rock couldn't use as money, but you couldn't carry them around in your wallet. Paper currency and metal coins, on the other hand, are capable of transferring vast purchasing power into small, easily carried and hidden bundles. Stability. Money must be stable and maintain its declared face value. A $10 bill should purchase the same amount of goods or services from one day to the next. The principle of stability allows people who wish to postpone purchases and save their money to do so without fear that will it decline in value. Durability. Money must be durable. The crisp new dollar bills you made for your products and you trade for your products at the mall will make their way all around town for about 6 years before being replaced. Checking account. Money stored in a safe. An account or a bank or other financial institution that can be withdrawn without advance notice, also called a demand deposit. Yo, now, NOW, negotiable order of withdrawal account. Interest-bearing checking account. Saving account. Accounts with funds that usually cannot be withdrawn without advance notice, also known as time deposits. Money market accounts. Accounts that offer higher interest rates than standard bank rates but with greater restrictions. Certificates of deposit, CDs, saving accounts that guarantee a depositor, holy shit, a depositor, a set interest rate over a specified interval as long as the funds are not withdrawn before the end of the period. 6 months or 1 year, for example. Credit cards means of access to pre-approved lines of credit granted by a bank or finance company. Reward cards, credit cards made available by stores that carry a benefit to the user. The credit card. I'll save that because this is at the end. Okay, we're like halfway through. Fuck. Alright, let's do this. Let's do this one more time. Alright. Yeah, the credit card. Card Accountability, Responsibility, and Disclosure Act 2009 was passed to relegate the practices of credit card companies. The law limited the ability of card issues to raise interest rates, limit credits for young adults, gave money more time to pay bills, and made clear due dates on billing cycles along with several other provisions. Debit card, a card that looks like a credit card but works like a check. Use it, it results in a direct, immediate electronic payment from the cardholder's checking account to a merchant or a third party. Credit card fraud. More and more computer hackers have managed to steal credit card and debit card information and either use the information for internet purchases or actually make a card exactly the same as the stolen card. Losses on credit card theft run into the billions. The consumer is usually not liable for the losses. Cryptocurrency, new type of money called cryptocurrency, has become popular over the last several years with technology-oriented people. Bitcoin is the most popular, but it has a fluctuating price, which makes it less desirable than fiat money like dollars, yens, and euros that are backed by governments. It's also does not have stable value or portability, but it does work in a digital economy with an instantaneous payments where the transaction size is large and the value of the cryptocurrency is owned by both the buyer and the seller. Federal Reserve Board, an independent agency of the federal government established in 1913 to relegate the nation's banking and financial industry, also called the Fed. The chair of the Board of Governors of the Federal Reserve System is an executive officer and serves a 4-year term beginning in the middle of the president's term and ending in the middle of the next president's term. Federal Reserve Board has 5 major responsibilities. Conduct monetary policy. Promote financial system stability. Supervise and relegate financial institutions and activities. Foster payment and settlement system safety and efficiency. To promote customer protection and community development. Let's talk about monetary policy, means by which the Fed controls the amount of money available in the economy. Inflation, rapid price increase because of too little money or economic recession. Disinflation, slow down of price increases because of too little growth in the money supply. The depression of the 1930s. In very rare cases, the U.S. has suffered from deflation when the actual purchasing power of the dollar has increased as prices decline. Open market operations, decisions to buy or sell U.S. Treasury bills, short-term debt issued by the U.S. government, and other investments in the open market. Reserve requirement, the percentage of deposits that banking institutions must hold in reserve. Discount rate. Discount rate. The rate of interest the Fed charges to loan money to any banking institution to meet reserve requirements. Credit controls. The authority to establish and enforce credit rules for financial institutions and some private investors. The Feds control the amount of money available in the economy through monetary policy, regulate banking institutions that are members of the Federal Reserve System. It determines which non-banking activities, such as brokerage services, leasing, and insurance, are appropriate for banks and which should be prohibited. The Federal Reserve provides national check processing on a huge scale. The division of the Fed, known as check change houses, handle almost all the checks written against a bank in one city and presented for deposit to a bank in a second city. With the advance of electric payment systems and the passage of the Check Clearing for the 21st Century Act, Check 21 Act, checks can grow and be processed in a day. The Fed is also responsible for supervising the federal insurance fund that protects the deposit of member institutions. Commercial banks, the largest and oldest of all financial institutions, relying mainly on checking and savings accounts as sources of funds for loans to businesses and individuals. Savings and Loan Association, SNLs, financial institutions that primarily offer savings accounts and make long-term loans for residential mortgages, also called thrifts. Credit union, a financial institution owned and controlled by its depositors who usually have a common employer. Profession, trade group, or religion. Mutual saving banks, financial institutions that are similar to savings and loan associations, but like credit unions, are owned by depositors. Federal Savings and Loan Insurance Company, corporations, FSLIC. When it established, I went too far ahead. Insured theft deposits prior to its insolvency and failure during the S&L crisis of the 1980s. National Credit Union Administration, an agency that relegates and charters credit unions and insures their deposits through a National Credit Union Insurance Fund. Insurance companies, businesses that protect their clients against financial losses from certain specified risks. Death, accident, and theft. Individual retirement account, IRA, which is established by individuals to provide for their personal retirement needs. Pension funds, managed investment pools set aside by individuals, corporation unions, and some non-profit organizations to provide retirement income for members. Mutual fund, an investment company that pools individual investor dollars and invests them in large numbers of well-diversified securities. Exchange traded funds, investment that made up of a pool of assets that can track an underlying index. Brokerage firms that buy and sell stocks, bonds, and other securities for the customers and provide other financial services. The new issue market is called a primary market because the sale of securities is for the first time. After the first sale, the securities are traded in the secondary markets by brokers. Finance companies, business that offer short-term loans at a substantial higher rate of interest than banks. Electronic funds transfers, EFT, any movement of funds by the means of an electronic terminal, telephone, computer, or magnetic tape. What the fuck? Automated teller machine, ATM, the most familiar form of electronic banking, which dispenses cash, accepts deposit, and allows balance inquiries and cash transfers from one account to another. Automated clearinghouse, a system that permits payments, such as deposits or withdrawals, to be made to and from a bank account by magnetic computer tape. For example, person-to-person P2P payment like PayPal, Apple Pay, and Venmo have created competition for banks to compete with third-party P2P apps. Early warning services, a financial institution that is owned by 7 large banks, introduced Zelle. Shadow banking refers to companies performing banking functions of some sort that are not regulated by banking regulators. Shadow banking activities are increasing. We're on to chapter 16. Last chapter. Holy fuck. Alright, I can do this. Alright. Kinda hurts now. Alright, chapter 16. Working capital management, the managing of short-term assets and liabilities. We use terms current and short-term interchangeably because short-term assets and liabilities are usually replaced by new assets and liabilities within 3 or 4 months, always within a year. Transaction balances, Cash kept on hand by a firm to pay normal daily expenses such as employee wages and bills for supplies and utilities. Lockbox and address, usually a commercial bank at which a company receives payments in order to speed collections from customers. Marketable securities, temporary investment of extra cash by organizations for up to 1 year in U.S. Treasury bills, certificates of deposit, commercial paper, or euro dollar loans. Treasury bills, T-bills, short-term debt obligations. The U.S. government sells to raise money. Commercial certificates of deposit, CDs, certificates of deposit used by commercial banks and brokerage companies, available in minimum amounts of 100,000, which may be traded prior to maturity. Commercial paper, a written promise from one company to another to pay a specific amount of money. Euro dollar market, a market for trading U.S. dollars in foreign countries. Line of credit, an arrangement by which a bank agrees to lend a specified amount of money to an organization upon request. Secured loans, loans backed by collateral that the bank can claim if the borrowers do not repay them. Unsecured loans, loans backed by the borrower's good reputation and previous credit rate and prime rate. The interest rate that commercial banks change their best customers, usually large corporations, for short-term loans. Factor, a finance company to which finances sell the accounts receivable, usually for a percentage of the total face value. Long-term fixed assets, production facilities, plants, offices, and equipment, all of which are expected to last for many years. Capital budgeting, the process of analyzing the needs of the business and selecting the assets that will maximize its value. Alright, that was flowy. Two common choices for raising these funds are attracting new owners, equity, financing, and taking on long-term liabilities. Debt financing, long-term liabilities that will be repaid over a number of years. I'm rapping, I can see the door opening, such as long-term loans and bond issues. Bonds, debt instruments that larger companies sell to raise long-term funds. Unsecured bonds, debentures are bonds that are not backed by a specific collateral. Secured bonds, bonds that are backed by specific collateral that must be forfeited in the event that the issuing firm defaults. Serial bonds, a sequence of small bond issues of progressively longer maturity. Floating rate bonds, bonds with interest rates that change with current interest rates otherwise available in the economy. Junk bonds, a special type of high interest rate bonds that carry higher inherent risk. Primary market, the market where firms raise financial capital. Second markets, secondary markets, stock exchanges and over-the-counter markets where investors can trade their securities with others. Investment banking, the sale of stocks and bonds for corporations. Security markets, the mechanism for buying and selling securities. That's all I wrote. Kind of a weird way to end it, but yeah. All right, bye bye.